Yes, you're welcome to today's lecture. We are going to look at cost concepts. So we see that with cost concepts, these are the fundamental building blocks of a cost accounting, defining different aspects of how costs are incurred, measured, and then analyzed. So we see that they provide a framework for understanding and interpreting cost information. We see that the amount, it refers to the amount of resources given up in exchange for goods or services, expressed in monetary terms, or it can also be defined as the amount of expenditure incurred or attributed to a given thing. So that is the cost. The cost can be defined as the amount of expenditure incurred or attributable to a given thing. For example, we have the expense, the loss, the costs, the cost center, profit. We have the profit center. So those are the examples of the cost concepts. So let's look at them one by one. We have the expense. When we talk about expense, what do we mean? Every business, we see that every business to be able to come up with profits, you have to incur some expenses. You have to make sure that there are some expenses that you need to incur to support the process to be able to come up with the profit. We see that a cost applied against revenue of a specific accounting period. So it follows the matching principles. The costs are matched to revenues they hope generate. For example, the electricity used in production during the month. That one can be an example of an expense. And then when we talk about loss, we see that we have loss. When we talk about loss, it's a reduction in firm's equity. The reduction in firm's equity, that is loss. What you have put in, for instance, if you have put in, you've put in as your capital when you're starting, you put 2,000. Then by the end of the month, you're getting the money that you're spending more than what you've put in. It means that your business is making loss. In other words, your business should bring more. It should generate more. So it's a reduction in firm's equity. And then we see that it occurs when no compensating value is received. There is no compensating value at all. It's received. It means that your business is making loss. And then it's not related to withdrawal of capital. Example, we have damage to assets due to fire with no insurance compensation. So for example, you have your business, and then all of a sudden at night, due to maybe electricity, maybe it can be fire from the neighborhood, it can be any cause that can cause fire, anything that can cause fire. Then your business, all of a sudden, it catch up with fire. And then to make matters worse, you have not registered your business for insurance. You're not insured at all. So it means that you've made loss. The assets are inside. They are bad. Now there is no compensation for you with the insurance company. They are not compensating you. So that is a loss. So we have what we call cost center. When we talk about cost center, it's a location, person, or equipment for which cost is ascertained or controlled. For example, the location, department. In location, we have the department, the sales area. That is the cost center. The department, that is the cost center. And then the sales area where you sell, that is. And then in equipment, we have the machine, and then we have the delivery van. Those are the cost center. And then person, we have the salesman, and then the machine operator. Those are the examples of a cost center. And then the purpose of this is to control cost within that segment. To control cost within that segment. We say department, you can be able to control cost within that department or the sales area. And then we have what we call profit center. It's a business segment responsible for both revenue and expenses. These ones are responsible for both revenue and expense. It measures the profit from specific activity. So the purpose is to delegate responsibilities to each member, and then also to measure individuals or segment performance. You can be able to measure individuals' performance. How is each individual performing? And then the example, we have the retail store branch with its own income and cost. A retail store branch with its own income and expenses. So thank you. I've come to an end of this lesson. Have a great day.